All right. Hello, everybody. Thanks for joining me. It's Real Crypto here, joined by Charles Allen, the CEO of BTCS. And he's been involved in the crypto space actually a long time. We decided to do this live interview. And just to give you guys a little bit more information on BTCS, I didn't know about it actually. Pretty interesting company. I like a lot of things about them. But how you doing, Charles? Thanks for joining me. How are you?
I'm good, thanks, Randy. Thanks so much for having me. I really appreciate it.
Yeah, no problem. Thanks for joining. So it looks like BTCS is well. Explain about your company a little bit. Tell us what you do. Tell us the markets that you're in.
Sure. So right now we've kind of taken a new direction that really kicked off in the beginning of 2021. So we're focused on three core things. The first is we secure blockchain infrastructures. Right now we do that on proof of stake consensus networks. So that is Ethereum 2.0. We're currently the first US public company to stake Ethereum. So we've got 240 nodes, which equates to about $15 million running on Ethereum's beacon chain, actively validating and verifying transactions. We plan to expand beyond just Ethereum into other proof of stake consensus blockchains. And we also are in the process of developing a staking as a service platform where others could come to our site and make it kind of seamless for them to go stake their cryptocurrencies in a non-custodial fashion. So that's kind of one of the core aspects. Let's call that blockchain infrastructure operations. The second thing we're working on is a data analytics platform where users can consolidate all their trade data from various exchanges and wallets and get performance metrics and also follow other traders. The goal of that is to allow basically users of the platform to effectively sell their data, their performance data, and allow others to subscribe to their data, really kind of follow their trades. We don't initially anticipate having a copy trade feature where the trades would get executed without any interaction. You'd actually have to go do those, but that's initially what we're looking is kind of a data analytics platform where we could add a social overlay and potentially have tax reporting as well. So those are the two main focuses, and then we also keep the majority of our treasury assets in cryptocurrency. So right now we own Bitcoin in addition to Ethereum, and we're looking at expanding that into other disruptive tokens for disruptive blockchains. So that's kind of the high level of what we're currently working on that we really kicked off in this year.
That's pretty interesting. Yeah, that's a wide range. Yeah, you and I earlier discussed a little bit about the staking, without holding custody, but the trading, the kind of traders platform. What kind of data are you looking to pull from traders? Are you looking at performance, or are you looking at just what they're doing, or?
Well, really what we want someone to have really a value proposition to get on our platform, right? So if they get on their platform and they, let's say, have a Coinbase or another exchange, a Bitfinex or Gemini, all that data could pull in, and then they could see a consolidated balance in one place, and then also get performance metrics. So if you have a Coinbase account, you can see your balance over time on a weekly basis, daily basis, monthly, etc. But they don't really give you how did I perform, right? How did I perform on a monthly basis? What's my annualized IRR? What's my Sharpie ratio or equivalent thereof for a cryptocurrency? So it's very much just a snapshot of your balance over time, which if you continue to fund your account over time or you've had sales, you don't really you don't have a good picture of how you're doing on a profit or loss basis or on a return basis. So our goal is if you can consolidate all this information, then a user, even if they can't make money on the platform, it'd be a value proposition for them to be able to have all of their data consolidated. If we do that and we can have returns and Sharpie ratio equivalent, like risk reward ratios showing up for that individual trader, then all of a sudden they can monetize their data by basically saying, hey, here's my profile. Someone could see maybe they're in the top 50 cryptos and they have, 100% annualized return, even in down markets. They could see it on a month-to-month basis and get a sense of what their risk profile is from a Sharpie ratio, and say, hey, I want to follow this guy, I want to subscribe to this guy, and that user could basically monetize their own data by saying, you can subscribe to my, their service or their data for, let's call it $10 a month or whatever the market would dictate, right? And us as a company providing the platform would charge a fee on, part of that subscription fee. So that's kind of the plan. We've hired a developer to lead a team to help build it out. We've been working on it for a while, but frankly, until this year, we didn't have great financial resources. We had pretty good, we had a good team, but it was small, and we didn't really have the financial resources to expand development. Now we have north of $20 million in cash and crypto, so we're actively pushing the development of this forward on a faster basis.
Yeah. So when did you? You mentioned your holdings are in crypto; they're not in USD. Are you the first company that to do that? Because recently we saw MicroStrategy go nuts, and we saw literally go nuts. They leveraged the bejesus out of the company. They did a bunch of raises using bonds and stuff like that. But I think you did it first, right? Didn't you?
Yeah. So we've been the first on a couple fronts, and often being the first is not the best thing, right? You kind of lay the groundwork for others to follow, right? Like you don't want to storm the beach first, right? If you want to go with that analogy. So in 2014 we went public. We basically started mining Bitcoin in 2014 and 2015. We had to figure out a lot of the accounting, which a lot of the other public companies get to, leverage the work we did on that, right? Because once you file, everyone can just read your filings. And we kind of pivoted the business model when Bitcoin crashed from, I think it was like 1,200, 1,300 down to about 130, 140, and effectively got flushed out of the market and really had to restart the company for all intents and purposes. And, at that point we thought, well, why don't we just build a treasury of digital currencies, right? Like if we had done that in 2014, we'd be a, $500 billion company just based on the value of the crypto we had at that time. So that's effectively what we did. We really kicked that off in 2017, I think is when we disclosed we were starting that. So that was well ahead of, MicroStrategy and Tesla and a lot of these other guys. Obviously that's not really noticed because we're a, bulletin board listed microcap company. We're kind of, very under the radar. But that's something we started doing, and we ended 2020 with $1 million of crypto on our balance sheet, but we carry it at the lowest price it's ever been since purchase. So when it goes up, we don't get to you won't see any increase in our balance sheet until we sell. You don't even know we have it. So what we actually do in the MD&A section of our filings, we actually disclose what our the fair market value of our holdings are, because you can sell Bitcoin, you can sell $10 million of Bitcoin in like a heartbeat, right? It doesn't take it's not an illiquid market. So we've disclosed we have over 20 million. In our last K, it only showed up as $1 million, but at that time, at year end, it was worth 4 million. So that's obviously been one of the challenges. But back to your question, I think we're the first to really do this. I think where we're looking for the future, though, is unlike a MicroStrategy that's basically, Mike Saylor's basically said, hey, we're going to take our crypto because we think, the value of the dollar is a, depreciating asset. It's not a good place to have the treasury, and move it just to Bitcoin. We see a lot more opportunity in tokens that you can actually build something on top of instead of just Bitcoin. So we're, that's kind of why we.
Yeah, which brings you basically to kind of what your revenue stream is right now, which is you're doing kind of another first, actually. I didn't think about this before the interview, but yeah, you're first to hold Bitcoin, and now you're the first to run kind of Ethereum staking nodes on the ETH 2.0, which isn't fully live yet, but you're able to utilize that platform and to bring in some revenue to the business. So what's your main revenue driver right now? Is it that staking business?
Correct. So it's the staking business. We only started that in Q1. So, if you look at, our last 10Q, there's no revenue because we were just effectively holding Bitcoin and Ethereum. We had a couple other tokens that we subsequently sold. So yeah, now that is our, that's the sole source of our revenue. but our goal is to expand beyond just securing Ethereum's beacon chain into other proof of stake networks where we can secure those blockchains and generate revenue from doing that. With the end goal, if we create a staking as a service platform, you're effectively, to kind of make a simplified analogy, almost like running a pool. Like you could run a Cardano, for example, pool where others delegate. You don't actually take their money, and you're going to get a small fee for basically putting up the infrastructure, right? And by way of example, I mean, I guess Coinbase is technically doing it now, right? Because they're public, they're huge, right? I think at a different level than they are on the smaller side. But you can stake through Coinbase, and they charge 25% of what you would get, right? You can stake through Kraken. It's a custodial staking model, and they charge 15%. And you actually have to go on Kraken. You really got to go read the fine print, right? They don't put that like on the front of their website.
Kraken. You should not be on there anyways, but.
Yeah, but if you are going to go there, like you definitely, you got to go read the fine print, because it's there, it's disclosed, but it's not on the front page. And even Coinbase, you got to, it's not, we take 25% right up front. You've got to go read the terms of service, and I think they just bake it into the return they say you're going to get. So our thought is, in a non-custodial fashion, I would assume we'll get less than that, because we're not managing customers' funds. We have kind of zero desire to do that. But to your question, we're the first U.S. public company to actively secure a proof of stake blockchain and run nodes. And, it's hard to do that, right? I think a lot of people don't think about the nuances in doing this. Like, we could have started this in December last year. We didn't, because, one of the main reasons was the accounting. Like, we're a public company. We have to report in accordance with US GAAP. There's no precedent on this. We were the first U.S. public company this year to file our 10K. So we filed our 10K with the year end 12/31. We filed January 26th. That's very fast. There's no way we could have done that if we started staking last year. We would have been up against the deadline. For our Q, it gave us time to really figure out the accounting. It's extremely nuanced. We've actually gone through the process of asking for SEC guidance on the accounting, because it's gray. And we don't want to get it wrong, right? We've had to restate our, back in 2015, we were the first company to mine Bitcoin. When we started in 2014 and we're doing it in 2015, we used to carry Bitcoin at fair market value, and that's not in accordance with US GAAP. So we had to go restate all our financials.
Oh, wow. That's not fun.
Right? No, it's not fun. It makes you look sloppy. It costs a lot of money.
Yeah, but you're playing in a gray area, because crypto and the modern accounting world essentially they're speaking two completely different languages. One is YOLO, the other is, what we've been speaking for forever. So you've got this business that is kind of on the fringe, trailblazing a little bit, having to eat those costs. Ethereum staking. Are there other platforms you're thinking about maybe making staking pools in? Because, as I read every single day, there's a lot more going on with cryptocurrency. I mean, DeFi is huge. Ethereum is obviously huge, but like you mentioned, Cardano staking pools, and there's Polkadot, and there's all these other platforms.
Tezos, Polkadot, Algorand. Yeah. So we're kind of looking at three criteria, right, for staking. One is, what's the quality of the blockchain, right, and the token as well. Like, what's its market cap? What's the liquidity? What's the use case? Is there actually utility for it, or is it just kind of a hyped coin and not really much there for the blockchain? So that's kind of bucket one, quality, right? Bucket two is what's the revenue potential that we could potentially earn doing that, right? And the cost to do it, right? How much is it going to cost for us to get into a new token, right? In terms of development cost. And then there's like the technical aspect of, how hard is it to do? How long is it going to take? I mean, we're not doing this on like a Raspberry Pi and, sitting on my desk, right? We're right now our operations are through Amazon Web Services. We want the best uptime we can, and it gets a little, I'm not the technical guy when it comes to this, but it's like, you want to start spinning up different computers if one goes down. When you're doing this in the cloud, sure, there's definitely an expertise there. But to your question, we're definitely, our goal is to expand beyond just Ethereum, right? We want to look at other proof of stake consensus algorithms where we believe in the blockchains and we think we can make a good return and run pools. Some are a little bit harder than others, right? Like Polkadot's one we like. It's a chain that allows for interoperability between other chains.
Yeah.
I think to get in and stake a pool now, you need like 85 million. It's probably come down a bit,
really?
but it's a decent amount. I'd have to check with our technical guys on it, but
I'd say that's
you need a
decent
kind
amount.
of a minimum amount, which could be other people's money coming in. Even if we had 100 million, I don't know if I'd drop 85 to buy Polkadot just to do that. It's kind of too many eggs in one basket.
Really, 85 million?
I think that's
Is that based on the coin price currently? Is it like so?
Exactly, it's based on coin price.
Okay.
So if prices come down, it's based on the I think there can only be 300. And I have to double check with our guys. I think there's only 300 validators that run kind of the 300 pools.
Yeah,
so you've got to knock the lowest guy off
too. They probably didn't spin up recently.
No, so you got to knock like the lowest guy off. So it's that's when I like Polkadot. I think it's a good blockchain. I don't know if we would that one's a little bit harder to get into from a staking as a service side, right? It's either a marketing effort or a capital effort, but we're definitely looking at that. We engaged a group, Launch Nodes, to help us with this process in terms of our Ethereum staking. So we're a small team. We're kind of leveraging outsourced resources when we can.
Yeah, so that's cool. Kind of on that note, you kind of made news a little bit, especially in the crypto community. There's a little known guy named Charlie Lee that you recently announced you're bringing to the board of your company. How'd you get introduced to Charlie? I mean, obviously you've been in the space a while, so have you guys loosely known each other, or did you get recently introduced? And then what does he bring onto the board for you guys?
So I guess I'll start with what I was looking for in a board, and then I can kind of tell you how that came about. So when I kind of thought about how I want to build the board for the company, there's really three pillars I wanted to touch on for our independent directors. One was someone that has great financial expertise that could be on the audit committee. That's Dave Garrity. He's been on the board for quite some time. He was CFO of Interclick, a Nasdaq listed company. The next kind of pillar I was looking for was someone with a great technical experience within the blockchain space, so that they can really give us guidance on directions we may go and the technical difficulties or challenges or things to look at. And then the third kind of pillar was someone with some legal expertise. Right now, obviously we can't get legal advice from an independent director, but someone that can help us kind of navigate that, right? Like if we were to run a staking as a service custodial business, we're looking to do a non-custodial, I'm pretty sure that would make us a money transmitter business and may make us subject to all of the FinCEN rules and regulations. You have to KYC, AML, et cetera. But that was kind of the three pillars. So we had David for the financial side, Charlie Lee, obviously on the technical side, having created Litecoin, been a lead engineer at Coinbase, and Google engineer, obviously fit the mold quite well right there. And then Carol Van Cleef on the legal side was just a great addition. So our goal was to kind of the highest profile board we could to help take the company to the next level. In terms of how we know Charlie, I mean, I've been in the space since end of 2013, 2014. So I've then the space was a lot smaller, right? I've gone to a lot of conferences. I think I met Charlie a couple times, and a lot of other. I mean, the people we were talking to join the board, there were some decent names, right? I mean, there was a lot of interest, and we were talking to a lot of people that I'm connected with. And I'm pretty thrilled with what we ended up with. And it was actually kind of funny. As a side note, after Charlie joined, he mentioned, because he remembered us, we used to be called Bitcoin Shop. Back in 2013,
Okay.
The company was named Bitcoin Shop, and we changed the name to BTCS because our bank accounts were getting shut having Bitcoin in our name, right? I don't know. If you're in the space long enough, you remember having your bank account shut. And so we needed a name literally overnight, and it was, let's just use our ticker, BTCS, right? That's how the name came about. It wasn't rocket science. We can't afford to have our bank account closed, right? We
Yeah,
just had one
HOP
closed.
is too expensive, so you gotta cut him, and you gotta cut some overhead there.
Yeah, and it was actually funny. So we had, when we were Bitcoin Shop, you could buy stuff on it. We had an e-commerce website where we were the first place where you could actually buy a product with Bitcoin. We actually took Bitcoin, Litecoin, and Dogecoin. But before we took Litecoin, we were just Bitcoin. And Charlie had actually emailed Michael. I think Michael dug out the email from 2013. And he's basically like offering to, help Bitcoin Shop integrate Litecoin payments and offering like technical help, right? So, I think the fact that I'd met him a few times, not a lot. I mean, I don't know if you remember because it was so long ago, and we knew a lot of people in common, and that he had heard of the company when we were back in Bitcoin Shop, and it actually offered help to help us take Litecoin. I think that kind of lended its hand, right? I think credibility is huge in this space. We've been around for, 7 years, right? And we didn't succeed in the beginning, but frankly, most of the startups back in 14, they're all gone. Like I invested in a bunch, they're all gone. Most of them are gone. It's like any startups. It's like the internet, like pets.com. There's so many startups that don't make it.
Yeah. I mean, how many companies are around from the bubble? 4?
Yeah. I mean, there's Coinbase, BitPay.
No, I mean 1999.
Oh yeah. Very few.
There's 4. I think it's 4. And then same with crypto in 2017. The other day we were looking at, because I'm doing an investment school right now. Shout out to Block Geeks, but I'm part of their crypto investment school, and they were talking about holding for longer periods of time. And I'm a trader, so I don't hold for longer periods of time. And I'm like, okay, well, let's go back to 2017. Let's see what you would have held from 2017. Like, what would you have held from 2017? The answer is probably 5 or 6 coins, right? You would have held Bitcoin, Ethereum, maybe Monero. You would have held maybe Bitcoin Cash, maybe Dash. None of them except for Bitcoin are in like past all-time highs, really. I mean, Ethereum's barely past the high of 2017. So anything that's actually the newer stuff rules, especially when it comes to technology, because all it takes is a delete and a control C and a control V, and you can have a whole new entity, especially in cryptocurrency. I mean, next week, not in reality, but in theory, you could basically do what Binance did: take a crypto, copy it, and then rebuild it, and then all of a sudden you have Pancake Swap running on it, and hundreds of millions of dollars on the network. So yeah, the early mover advantage usually is not an advantage. There's an early adopter advantage, and what's the other one I'm thinking about? It's first mover advantage.
Yeah.
In terms of like what hits the marketplace.
100% agree, right? I mean, when we came out in 2014, went public, I mean, it was just headwinds everywhere, right? And I think, the fact we're still around is, really a testament to Michael and I sticking around and not letting the company die when we could have. And, we've learned a lot through that process. I think one of the things we're focused on now with the companies I don't want to take really bets on applications built on top of blockchains. It's so risky, right?
Yeah, you want the layer 1 network.
Exactly, right? Like, yeah. I mean, I was around and I lived through my first job out of college. I was a mechanical engineer, and I worked at a compound semiconductor company. And I went to go work at a startup out in Santa Barbara that made tunable lasers for the fiber optic industry. And I remember when the internet bubble burst, like everyone got wiped, right? Like there was just no jobs, right? Every company was going out of business. And, it was kind of a lesson learned. And I think the interesting thing about, blockchain technology is you can actually invest at that like protocol level, right? Like you can bet the infrastructure, and you can't do that with the internet.
Yeah, not really. I mean, you could have maybe bet on Verizon or AT&T, but that's actually a good point, because when you're thinking about it with crypto is leveraging this legacy infrastructure that is billions, if not a trillion. I don't know how many billions or hundreds of billions of dollars, but the fiber that's laid across the globe, crypto just like it just uses that.
Yep.
And then, but yeah, you can invest in Ethereum, the backbone of the network, and I definitely get that point. So you're basically your business model is crypto is going to be massive, and we want to run some of the nodes and get some of the get some of that revenue that comes through. Did you take that approach? Like, why that specific approach instead of like a Coinbase where you're taking custody? Because I know there's a lot of regulations involved, but why this particular strategy instead of something that, because like your major upside, like what's your major upside here? Is it the fact that all these Ethereum nodes are going to be that much more valuable? Is it holding the Ethereum and you're just basically building like a foundation, I guess, of capital, and then how do you leverage that to maybe get more nodes? Like, I can see a lot of different nuanced ways you could take things.
Well, so look, those are some great questions. I think to start, why didn't we go the Coinbase path? And look, Coinbase has crushed it, but it hasn't been, it wasn't always easy, right? And I kind of learned that recently. But when we first started out, and this is kind of the past, my thought was, we went public. The e-commerce site wasn't all that valuable. We weren't really able to get it into a competitive state with like an Amazon. And my thought was, well, we've got a public vehicle. Let's go and invest in a couple very specific siloed companies, right? Like we invested in a Bitcoin ATM company. We invested in a payment processor called GoCoin, so we could accept Litecoin, Dogecoin, and Bitcoin. And we actually integrated with that to our e-commerce site. We invested in a company called BitVault, later got rebranded to Gem, and they had a multi-sig wallet solution. I thought, well, I don't have time to figure out the technology of a wallet. Let's invest in this one. And the end goal, what I was thinking with all of this is, I don't have the capital to build a Coinbase. What if I invest in all these companies that have all the different components, and then I try to do a roll-up strategy, right? And get myself to the Nasdaq where I just buy all these out and do the exit strategy, and then I will have built a Coinbase by roll-up. And it turns out that's really, really hard to do, right?
Well, especially when you're investing in other businesses that you really don't necessarily have control over.
Exactly, right. And we needed to be really an attractive exit proposition. We couldn't get off the bulletin board, and we were having trouble getting through the SEC with registration statements. So it just became an impossible task. And so we just kind of pivoted away from that and moved on to Bitcoin mining, right? And to go in and do what Coinbase does, I mean, that's hundreds of millions of dollars invested. I don't have access to hundreds of millions of dollars today, right? So when you start looking at a business of, okay, like where are you? How are how are the cards stacked against you and for you, and where can you make sensible plays to create shareholder value? It really was okay in 2017, 2018. Like, let's just buy crypto, right? We don't need to waste money on expenses that to build a project that we can't get to fruition. And so that's kind of how we came to this path. And I also think, just high level, as much as I like Bitcoin, I think there are other blockchains where the technology is better. I think we can move away from, proof of stake consensus or, other consensus mechanisms, may be more viable for the long term in terms of energy uses, carbon emissions, et cetera. And if you can still get the same security by a different consensus mechanism, why do you need mining, right?
Yeah.
You don't need Bitcoin mining, right? You don't need all these machines running hardware to solve cryptographic algorithms. Maybe Bitcoin just stays as more of an asset class, right? And less as a currency. You can't really build on top of Bitcoin. So I don't view Bitcoin as I view it more as an asset class, kind of like how Michael Saylor views it, right? At MicroStrategy, it's a good investment. I think it'll go up. I think money's flowing there, but I don't think it's the backbone of Web 3.0. It's a great proof of concept of what can be done with blockchains. And when you kind of look at it that way, and look, we own millions of Bitcoin, right? Like, don't get me wrong. I'm not saying I don't like the asset, but I'd much rather secure networks that are going to be the foundation for what is going to be, the next generation of, Web 3.0, right? To me, that's much more interesting. And if I don't have to bet the specific applications on top of it, and I can take, it's still risky, but crypto is risky either way, right? You're betting. You're betting crypto, right? But if I can bet various blockchains, at the base layer and not at the application layer, have exposure to that, and then generate revenue by securing those. And then on top of that, if I can open a platform where others can do the same and generate even more revenue, to me, that's a much more scalable business model with a lot less risk compared to most of the other cryptocurrency plays in the public markets. So I think that's, the goal is, what can I give to, what can I do that gives investors the best, possibility of success, and create shareholder value, and minimize the risks we're taking. And I think that broader approach is where I'm focused on right now.
Yeah, and you are unique in BTCS is one of the few publicly traded crypto companies. Like, how many are there actually? Like 5 or something like that? There's Riot Blockchain, which is a mining. There's Coinbase now, obviously, which dabbles in crypto. There's you guys, and there's SI, which is like the bank to crypto. Like, there's some other crypto kind of sideways derivative plays, but there's very few pure crypto plays. Where do you see yourself in terms of the people right now, or the companies right now that are in the public marketplace, versus you?
Sure. So, I mean, I would break it down in, excluding the Canadian companies. Right now, there's about 13 U.S. companies listed on exchanges. There's about 8 on the OTC markets, and this excludes. There's about 30 in Canada that also are quoted on either OTC markets and some on the Nasdaq. But if I just go through the let's call it the Nasdaq ones, the big ones are Marathon Digital Holdings, Riot Blockchain. They're both obviously mining Bitcoin. Then there's I guess Canon, but they're a hardware an ASIC manufacturer, and they're foreign, but whatever, they're still on U.S. exchange. eBang, they're foreign, mining Bitcoin. Bit Digital, mining Bitcoin. CleanSpark, mining Bitcoin. The 9 Limited pivoted into mining Bitcoin. Future FinTech, actually they're not mining Bitcoin. GoodWorks is a SPAC that's moving into the space, mining Bitcoin. Mechanical Technology, mining Bitcoin. Like, okay, let's go to the
seen
OTC
this story
company.
Before.
Yeah, EcoArc Holdings, mining Bitcoin. Integrated Ventures, mining Bitcoin. MGT Capital, mining Bitcoin.
Lots of innovation out there is what you're saying.
Yeah, we were mining Bitcoin in 2014, 2015, and it's a good business. I think right now, if your equipment is running, you're going to do well. But to be entering the market now is so risky that no one focuses on the difficulty. The difficulty goes up 20, it's like 10 to 20% a month. I don't follow it every day, but what does that mean? Your revenue goes down. It's like most people want startup companies to have a hockey stick, revenue projection. Obviously, that never really happens. Every startup gives you a hockey stick that never comes to fruition. But Bitcoin mining, your revenue is going down every single month. It's going down, right? Unless Bitcoin keeps going up, right? So, but your tokens earned, your Bitcoin earned goes down every single month. So the only way you make up for that is the price keeps going up, or you keep buying more machines. And so it's a extremely capital intensive business. Yeah. If you have the lowest cost, it can be a very good business to be in. Right now, if you were in before the bull run, it's perfect timing. If you come in at the top of the market, and now we've seen a pullback in Bitcoin, you're coming at the top. If you come in at the top of the market and you order your equipment, you're paying a premium for that equipment, and it's not getting delivered for 6 to 9 months, you've got a whole lot of risk. So, I think that's kind of a game of musical chairs. We played that and lost in 2014 and 15. We thought if you're going to do it, you should vertically integrate. We didn't really have the capital.
I got a question for you. As someone that did run some Bitcoin miners, we've seen it in the on-chain analysis with Bitcoin that a lot of miners are just holding their Bitcoin. They're not actually selling them to market. Recently, as a Bitcoin miner, are you just constantly selling Bitcoin, or do you have to do a little bit of market timing to try to capitalize on those runs? Because during the bear market, when things are dry, they're pretty dry. Hopefully, you've got capital, but do you just constantly sell and keep a little bit? Do you sell all of it? What is the business case for that?
It depends on the market. I can tell you in 2014 and 15 when we were mining, when Bitcoin was doing well, we would sell enough to cover our costs, right? Because we didn't want to just keep it all on our balance sheet, and then if it came down, not be able to pay our bills. So we would sell to cover our costs. And then, this is different. Bitcoin dropped from 1,300. That's a crazy number to even think about today. But when it dropped from 1,300 to sub 200, we were selling everything. Right. we'd get it in, we'd sell it, and we'd pay our bills. Right. Yeah. And we were struggling to survive. I think it really depends. Companies have different philosophies.
Sure.
My preference would probably be, depending, go long. Now, it's a bit pricey. and it's come down a bit in the last, over the weekend. I think it was like a 8% correction and kind of kicked back up. So, it's up to each company, right? I think miners typically want to cover their costs,
but,
right?
But in a way, they are kind of timing the market. You all kind of have to do that, because when you think about it, if you're mining Bitcoin, like you said, you cover your costs, but I mean, what's the business model behind a Bitcoin mining operation? Obviously, you're expecting to make a profit, because like if you're mining gold, you're expecting to make a profit per ton. That's how you're viewing it, right? You're like, I'm going to pay X per ton. I'm gonna sell it X per ton. Same with BTC, but with the ebbs and flows of Bitcoin, it does seem a lot crazier. So with your staking pools that you guys have running, when did you accumulate the Ethereum to create those staking pools? And then, like it, are you viable? Because like you mentioned, when Bitcoin dropped, you had to scramble to sell the Bitcoin. If Ethereum drops, what does that do to your revenue as a business that's publicly traded?
So I don't want to tell you numbers that I obviously can't tell you numbers we haven't put out into the market.
Can you give
the
me
majority
a date?
Of the Ethereum, what? Yeah, I can. But the majority of the Ethereum that we staked, we had purchased, I think, starting in. I'd have to go look at our filings. I think around, we've been trickling into it. So 2019, 2020. I mean, pretty low prices, right?
So you've got good entry points. So from that perspective, you're definitely not going to be underwater.
No, and I mean, look, the public accounting of this is just so it's awful, right? I mean, we basically, it's a quick example. If we bought $1 million of Ethereum, right, and it dropped the next day to 500,000 in like a flash crash and went right back to $1 million, we would take a $500,000 impairment charge on our income statement, and then forever we would keep that Ethereum at $500,000 on our balance sheet, and we would never mark it back up until we sell.
How does that work? I mean, it's got to be a little frustrating for you, because obviously as a CEO, you're trying to portray your company in a good and valid light. Like, you obviously don't want to be misleading people, and the government's trying to behold you to that. But if you've got, say, $50 million worth of these crypto assets, but on your balance sheet it looks like it's 10 million, like, is that a thing? Is that something that you have to fight through?
Oh yeah, we have that. Like,
that,
yeah. I mean, look at our.
Well, that's what. Yeah, from based on what you were saying earlier, I'm like, well, you've got so many BTC and Ethereum, and yeah, I think you mentioned this to me last time we talked, is that you have to hold it at the lowest price. So if someone's just going through a statement without you having to explain it, can you put an asterisk down there and say this price is based on this date or something like that?
So as far as our financial statements need to be accounted for in accordance with US GAAP. That includes the notes to financial statements. We can't put anything in the notes to financial statements that are not in accordance with US GAAP, period. Like, it doesn't fly.
You can't explain yourself.
Now,
no explanation.
Not even an explanation. Nope.
Wow.
US GAAP
put out public statements, maybe?
So we're allowed to put it in the MD&A section of our filing. So if you go look at our 10K in the MD&A, we're like, hey, we got 4 million. One of the challenges to that is, people don't necessarily always read our SEC filing. So if you look at Yahoo Finance, Google Finance, Capital IQ, any of the data sources that pull data from SEC filings, they pull it from the financial statements. That, US GAAP creates a false and misleading picture for any company in the space. I mean, if you go look at Coinbase's S1, they actually have, they've broken out EBITDA calculations in the MD&A section. And one of the things they do, if you read how, and EBITDA is kind of a, no one, like, auditors and the SEC are very particular that you have to describe exactly the changes you make to reconcile that to US GAAP and net income. And one of the things they actually have in theirs is they've excluded the impairment on cryptocurrencies, right? Because it's, otherwise you end up kind of just pounding everything to the lowest level, right? So even if we made $1 million in revenue, right, and we got cryptocurrency and then it dropped 50% and popped back up that day, we mark down the value of the revenue, right? Because now it moves to our balance sheet once we've earned it. We would mark that down as well. So unfortunately, there's nothing we can do. we actually, if you go to our website, on the first frequently asked question is, why is your crypto, different on the balance sheet than what you disclose? And we explain it. Beyond explaining it outside of our financials and notes to financials, which we're not allowed to, have to be in accordance with US GAAP, there's nothing we can do, right? We can put it in press releases, we can put it in other sections of our filings. I can tell someone like you on this call, randomly, hey, this is what we have. But a lot of that, I don't know if that information is going to necessarily flow, especially when we're kind of a bulletin board company. I don't know if that'll flow to kind of like the retail investors. It definitely, like if you're putting our ticker into a stock screener or something, no one's going to know, right? It is what it is, right? It's until US GAAP changes, there's nothing we can do. And I've had calls with the SEC on this. We had to actually restate our financials. I think I mentioned this earlier. In it was 2015. I could double check the numbers, but we were carrying crypto at fair market value. It made sense. And this is before the big, I think PwC came out with a report of how to do it, and no one was really sure. And I remember being on a call with them, and they actually, they were very helpful. And they basically said, look, just because you don't like the rules doesn't mean you don't get to follow them. If every company that said, hey, US GAAP doesn't apply to me, I'm not going to follow the rules, we would have chaos. So, there's a process and procedure to change the rules. Unfortunately, if you're the only one doing it and you're a $10 or $50 million market cap company, no one cares. No one's going to change the rules for you, right? Yeah. The more people that get involved in this, right, with Tesla buying Bitcoin and MicroStrategy, just pounding away on their purchases, the probability that someone with a lot of money and influence says this doesn't make any sense on our financial statements, let's start lobbying and going through a process to bring attention to it, where it moves up the list of importance, the interest level for, I guess it's the Financial Accounting Standards Board has a committee that needs to look at this. And I don't know exactly how the process works to update it. It's something that we have zero ability to influence. So
yeah, you don't want to waste money. I mean, how much of a hindrance is that for you? Just real quick, you don't have to go into detail, but I know a lot of times when companies have a problem like that. I watched something recently where baseball got into a lawsuit where they were going to have to pay all their minor league players a butt ton of money because they work for basically $1 an hour, and they just went straight to Congress, had them change a law.
So we're not doing that.
I know. Yeah, no, I know that because it's just a lot of time and resources. But how much is this a hindrance? Are you? So I guess roundabout questions. Are you trying to raise capital these days? Or question? Do you guys have any debt? And then if obviously this doesn't affect your lending because the lenders don't care about your actual statements to the public. They're going to look at other numbers, right?
Yeah. So we have north of 20 million in cash and crypto. So it's a pretty strong balance sheet, and that's what we've put out in press releases. As far as debt, we have two convertible notes that are $2 million each. Excuse me, $2 million in aggregate, $1 million each. So we have $2 million in debt. And the notes convert. They'll either convert to common or we could pay them off. Those are the two options. And so one of the notes we had raised in I think December 16th last year, and the other in January 16th this year. So in the grand scheme of things, it's not a huge amount of money. We have enough to pay it off if we wanted to, or potentially convert. Yeah. We can actually force conversion. So I assume, that may just go away. As far as, raising additional capital, we have a $100 million shelf registration statement effective with the SEC. So we have the bandwidth to raise capital if we wanted to. That'll really depend on, valuation and if we, potential use of proceeds. We're really lucky to have that. For a lot of people don't really think about this, but just because you're public doesn't mean you have access to capital. They're two completely different things. If you're a public company, you still you can't issue shares that trade the next day, right? They need to be registered, or if they're not registered, they have to be sold pursuant to an exemption, which means basically investors have to hold for 6 months. And all of a sudden, if you're doing those deals, it looks much more like a venture capital deal. It's a venture, it's a VC style deal. If you have, what we have, a $100 million shelf, you can raise money overnight. We did a $9.5 million common stock offering with warrants, and got it. We closed that in 1 day, right? We reached out to investors. We hired an investment bank that helped us with the they basically managed the process. They started making phone calls at 4 o'clock, and we were done. We were done that night,
Wow.
right? I mean, you don't get the money for 2 days, right? T+2 settlement, but like, yeah, the docs were all signed, and we were done. It was a done deal. So I don't know if, I don't, given what we've done since raising that money, I think that was March 4th. We'll have to think about when we go back to market. Frankly, my goal would be to get to the Nasdaq. I think, it's potential there could be a higher valuation. Typically, Nasdaq listed companies have more liquidity and trade at higher multiples than companies that, their peers on the OTC markets. So, if we're able to execute on that, that's kind of my core focus, right? Moving this from the bulletin board to the Nasdaq. We'll obviously look at, growing the business, and to do that, we may want to raise more capital, right? Make us more competitive, right? I think that's most companies. That's pretty common.
So getting to the Nasdaq, that's pretty big. What steps are left for you guys to get there?
So really, at this point, we haven't applied yet. I think the goal, the plan is to apply when we file our next 10Q, because that would have a lot of the developments that we've been working on and announced in various press releases over this last quarter incorporated, and it would really put a good, it should look really nice for them in terms of meeting all the initial listing requirements. In order to list, we basically have, based on what we've raised to date and what we've disclosed as of 12/31, a reasonable person could assume we've met the shareholders' equity requirement. So, I think we've got most everything achieved, right? We added an independent board, we added Charlie Lee, and we added Carol Van Cleef. So that's one of the big criteria. So really now it's a question of applying and managing the process and hoping, when they evaluate the company, they think, we're appropriate to be on the exchange. We do need a $4 stock price, but again, that's not brain surgery to get, right? As much as I know a lot of retail holders hate when you do a reverse split, I think doing a reverse split, right before an uplisting to the Nasdaq is worthwhile. Right. I mean, if there's
what's your guys' outstanding shares right now?
What
are your outstanding shares right now?
So approximately 55 million common shares. Then management owns. We have a preferred stock which converts to, I think it's about 39 million shares now. So there's call it 95 million. And then we have warrants and options, right? Warrants, they strike at $1.15. They're out of the money. Those were issued in connection with our last with a $9.5 million deal we did in March. I think that's off the top of my head, it's around 7 or 8 million. I think it's 7.8 million warrants. I could look up the exact number, but that's a ballpark. So pretty. Yeah, I mean, overall, we're apart from the notes, it's a pretty plain vanilla cap structure. Management has a preferred, but it basically, our preferred converts to common either at the earlier of a Nasdaq listing, which we really did to clean the thing up, right? Because Nasdaq, they don't really like to have preferred shares outstanding, or the earliest it can convert would be 2 years at our option, and at 4 years it's automatically forced into common. So until we get to the Nasdaq, we're kind of in this for the long haul, right? We haven't, over the last 7 years, I think I sold shares once, and it was more just to make sure a broker would actually take our shares. It's actually pretty hard if you're an insider.
Oh, really?
It's like if you're on the Nasdaq, it's easy. If you're on the bulletin board, I mean, when we were running into difficult times for the company, one of the tests was, do we even want equity again? Do we want to keep going with this thing? And one of the big questions is, well, if we can never sell our shares, they're worthless. It's just a tax liability. And so, we actually went through the process of seeing if we could sell. And I think we must talk to 20, 30 brokers. And in order to actually sell them, we had to register them on an S1, which is very rare. Most people don't do, right? But I think once we crossed that, it's like, hey, our shares could actually have value. let's drive this thing forward. Let's, let's get motivated. Let's get some equity, in the hands of management, and let's take this, the company to the next level. So that was, the one time we sold, and that was kind of the rationale behind it.
Yeah. So now your next step is Nasdaq, and we're gonna probably do a reverse stock split, because that's really the only way to really control your share price. There's really not much else you can do about that. And then, so where from there, like when you get on the Nasdaq, at that stage, like what's your plans then? What are your plans for like the next 5? Where do you see 5, 10 years? I know you have these apps you're developing. Do you have like a bigger, broader strategy? Is it basically based on running these nodes, or is it the app? Because those are kind of two separate businesses.
Yeah. I think in the, what I call blockchain infrastructure solutions, or we've called that in the past transaction verification services, or you call it staking or mining, whatever you want to call it. Like, I view securing blockchains as the, one of the less risky ways to get exposure to the industry without taking bets on specific applications built on top, right? Like, let's bet the internet and let's secure the internet. So, with that in mind, we want to broaden out into other blockchains that we like beyond just Ethereum. So that's kind of on the roadmap, build a platform to allow others to do that. So that's all, honestly, like, we're looking to execute on that this year, right? That's kind of what we've put out in press releases. The data analytics platform, really, that's to monetize that. We're going to need to, 1, build a really nice app, 2, have users come on, and then 3, then monetize them. So that's going to be a longer process.
Sure.
But beyond that, we'll see. I mean, the market is it's evolving so quickly, right? It's like there's so many things going on. I don't know necessarily which direction we'll want to go in 2, 3, 4, 5 years, right? It's it's hard to say, right? I mean,
but Ethereum's a good bet. I mean, that's a good one to start with. Ethereum is not really going anywhere anytime soon. Everyone's thinking about maybe Cardano, if that ever decides to finally get up and going, and Polkadot, like you said, but $85 million bucks seems like
we're not going to stake, right? We don't have it, right? But I mean, overall, there's a lot of hype around DeFi and NFTs, which are really interesting, right? Like, I mean, as a side note,
how do you get into that though? I mean, other than just playing Ethereum?
I don't want to, right? I mean, that's like, if you look at, and this is one of the things, like NFTs are like the first killer app for blockchain solutions. And the reason they are is there's no incumbent player. There's just no incumbent player. Every other, I mean, if you look at kind of, the last 7 or 8 years, there was a Bitcoin hype in 2014, 2015, like 13, 14, 15. It's all about Bitcoin. Then everyone started moving to, it's all about blockchain. You had companies changing their name from like Long Island Iced Tea went to Long Island Blockchain, right?
Yeah.
Everyone was blockchain, right? No one does anything. No one knows about it. It's just blockchain. We're doing blockchain now, right? And then, the next evolution was ICOs. ICOs is the big thing, right? Now it's NFTs and DeFi. So again, I'm less like, I don't want to just jump on, the next bandwagon. That's why I kind of like being at the infrastructure level. But the thing that I think is a little bit different about NFTs is when everyone was trying to put everything on the blockchain, they were always fighting incumbent players, right? So if you look at like T0, right? And I own Overstock, full disclosure, and I like what they're doing with T0, but they're going to go up against Nasdaq and New York Stock Exchange, which are building blockchain-based pipes for their current solutions. Why wouldn't they do that, right?
Sure.
So creating a security market when there are really good security markets already available is like a really, really hard thing to do. If you want to put all the real estate records on the blockchain, makes a lot of sense, right? All real estate records should be on a blockchain. You shouldn't need title insurance. Okay, that's a fragmented industry run by, small government little offices on the county level. That's like an impossible task, like a 50-year project, right? Yeah. Led by who? I don't know who, right? Who's going to, it's very hard to succeed.
Yeah, we were talking about that in my community not too long ago and like you said, the evolution, 2017 is like, let's throw everything at the wall. Let's see what sticks. Let's see what floats. And then, in my opinion, I think DeFi is what we're seeing is what's going to stick, for a number of reasons. And NFTs, absolutely with real estate. But again, the biggest play to back on that case would be Ethereum, because if you're trying to bet on which one's going to do the legwork to get to those 8 million counties and put all those things on the blockchain, like, come on, that company doesn't even exist yet. That company is going to be out there in probably 5 to 10 years. So
Yep.
yeah, having the pure Ethereum play, I mean, it's not as sexy, but it's a workhorse and it's likely going to get you to where you're going, right?
Well, and it'll keep us right. Like we've been around 7 years. I don't want to fall by the wayside, right? I don't want to bet
Yeah.
the farm on one thing. So I mean, we kind of are. We're betting on blockchains as an industry, and we're securing multiple. We're right now just Ethereum, but we're looking to secure multiple ones. So and that's why like NFTs I think are really interesting, because there's no incumbent player, but you have
That's
physical
true.
art, right? There is no market for
Digital
digital
100%.
art yet. It's
Yeah.
been missing. It's just been missing.
Yeah, it is. I
So
mean, if you think about it, there's been a little bit of work in that space, probably for about 15 years now. There's communities that have sold tokens within the community, like World of Warcraft. I'm not a WoW person. Excuse me if I do something wrong, all the viewers out there. But there's
yeah.
assets within these communities. But now with NFT on Ethereum, and see, I think here's the key part, is that it's a third party that's agnostic to whatever you're putting on it. So anything can go on this NFT. Could be a piece of art, which is a little bit weird, but whatever. And then, but yeah, Ethereum is the only way to play that. And then if it gets bigger, and then yeah, isn't Visa going to start doing things to USDC on Ethereum? So that's going to embolden the Ethereum network even further and really displace places like Cardano or even Polkadot that may have had a shot. I mean, that could be nothing, could be something huge. Have you thought about that at all?
Yeah, and we'll see. I mean, look, I don't have a crystal ball, right?
Sure.
My gut is that we're going to see a shift to. We really haven't seen the apps that are going to get built on and utilize blockchains, right? There's a lot of talk, but in terms of like real world examples, we're just starting to see these things pop out, like NFT. And I know there's a lot of stuff going on in DeFi, but this is all recent. This isn't with like a couple years. This isn't, and NFTs even less, right?
Yeah,
So,
months.
yeah, I mean, it's maybe it could be Polkadot, it could be Cardano. I mean, I don't know, right? Maybe it's Ethereum. I mean, I think Ethereum's been around a long time. I think the move from proof of work to proof of stake, which hopefully will lower gas fees and make the net more robust. I think that'll be huge, right? And so, my goal is, if I'm wrong on that, we also want to move into others, right? Like why have a single bet when I can have a diversified infrastructure play? That's much more interesting, right? Than putting all of our. I mean, right now we're just Ethereum. How and when we choose to expand beyond that, that'll evolve over time. But yeah, I mean, I think it's a much better place to be, focused on, a couple key blockchains.
Yeah, have you announced anything like such as profit margins and things for your business on the block? I know it's pretty new, because when you said you spun these up, when the nodes, I forget.
So we really started in Q1.
Oh, okay.
We, I forget the exact date. I think it was in late January or mid February, because we basically started. We launched 3 nodes, which was very small, 150 grand, ballpark, right? Or 96 Ethereum, 32 per node, and then we expanded with another 97, and then another 100, and then another 40. Really, we were just kind of ramping up. With the first 3 to make sure we could actually run the operations without a hitch. And then we kind of, expanded from there. We haven't put out, our 10Q for the period ended March 31st is obviously not out, so I can't speak to the, any numbers that would be included in that. We did put a link to a public calculator, right? It's on, where you can actually go plug in 240 nodes and see what the revenue would look like. Right.
Yeah.
And our thought was, this way we don't have to specifically put out guidance. We can simply, direct investors to a public, third party source, and they can come to their own, conclusions with respect to what we could do. Right. And I'm going to do that right now. If you put in, 240 nodes, and it obviously calculates based on the price that day. Right. So based on that, I just stuck it in a public calculator. It's showing, about 1.28 million annual, revenue. Now,
Annual revenue.
I
Now
think,
does the okay, so we haven't gone too technical here, and I'm not super high on the technicals of Ethereum and the mainnet. So you don't obviously ETH 2.0 is not live, but you're running on like a side chain of that, or what?
yeah, that's. I mean, if we want to keep the conversation kind of high level,
Yeah, let's do that.
it's like almost think of it as like a software upgrade, right? Like you basically move your Ethereum, over into a smart contract on the Beacon chain, and then it's effectively locked into that chain. And then once you've done that, once you've moved it over, you have the ability to spin up and run nodes and and secure that blockchain, and then you're rewarded for that. So, yeah, I mean, it's effectively stuck there until the chains either merge back together. So I think about it, for the most part, as a software upgrade.
Okay, and then so when things do move back over, does that put you in a better position because you're an older node in some fashion, or do you just become part of a larger pool?
No, I don't think not a huge difference. Like each proof of stake blockchain has different selection methodology on what validator gets picked, right? Is it
Yeah, but there's no
age of
hierarchy
coins?
for how
Yeah,
old
age
your
of
blockchain is.
coins, how many coins. I don't think it's a meaningful difference, right?
Uh,
So,
kind of a
uh,
weird sideways question. Have you ever? There's this big thing about hex these days. I know hex and Ethereum are kind of sideways or anything. Have you looked into hex at all?
honestly, I have not.
Okay, you
I can
don't
take a
have
look at
to.
it.
It's just I just know that they do these staking pools with it's it sounds gimmicky, almost a little bit like a Ponzi scheme. Actually now that I say that I feel bad even asking you about it. Um, anyway, forget about that. So never mind about that. But um, yeah, 2.0. Let me see. I had a little list here. So we gone over. We talked a little bit about Charlie Lee and his edition board. Which, by the way, good job on that. He's going to bring you guys a lot of good press, and obviously he's a really smart guy.
Yeah.
I had a note down here about 2017. What were you guys doing in 2017, and how did the Bitcoin, you know, pop and drop affect you guys back then?
Let
Or
me
were you in
think.
a hiatus mode, kind of?
Yeah, I mean, look, I'm just trying to think. 2017. Um, I think we actually had a merger teed up. And if you give me 1 second, I mean, this is going back like 4 years. So we've worked on so many things. Um, let me just give me 1 second and I will,
Okay, I live my life on the chart, so if I need something, I have to go back to the chart and see what it looks like. That's what
yeah.
triggers me.
So 2017. So, um, I don't know, what were we doing in 2017? All right, so 2017, we actually were working. We had a merger. We teed up a merger with Blockchain Global. It was an Australian company that in the space. They had an exchange and they had what did they have? What else did they have? I think they had a little bit of mining left, and they had a bunch of Bitcoin, and it was, and then they had kind of like an incubator. So it was an interesting deal. And I'm just doing again off the top of my head because this is like 4 years ago.
Sure.
We basically signed an LOI. It's kind of a weird position to be in. We had a merger that didn't pan out with Spindoolies. Just the market wasn't there for us. We needed to raise money to get it done. So we really didn't want to put out a press release that we've got a merger teed up. That's not, I wanted to just close the merger and announce that, hey, we did this thing, right? The challenge was, no one wants to merge with an OTC company if you've got, we had some preferred and some other, securities in our cap table that made it, unattractive for, a target company to merge in. And so we went to the investors and said, hey, basically, we want to take you over the wall. We need to renegotiate the terms. And they basically said, no, you don't give us any material non-public information. We're in the market. Like, you can't tell us anything. Go announce it so that the market knows, and then we can have a discussion, right? And so we kind of got put in a position we didn't have a choice. We put out a press release for describing the merger of Blockchain Global. We at that point hadn't done enough due diligence, frankly, because we didn't have, we had limited resources. We need to go over to Australia. And that was kind of interesting. So we after that we did, I think we raised 1.1 million, and Blockchain Global actually led the round with 250,000, and they invested with Bitcoin. And that to us was kind of equivalent of a break fee, right? Like we didn't have a break fee with the LOI, but they invested. So it gave us a high degree of confidence that, yeah, they're real. They've got money. Everything checks out. Let's go. Let's fly over to Australia. So we took the whole team. We went over to Australia for like a week and a half, did due diligence, and it didn't check out. They couldn't get through an audit. It didn't check out. And so we had we terminated the merger. And that was kind of a bummer. We then had another merger teed up. We never announced that we had it lined up. Again, I did not want to be announcing something. I'm actually an investor in that company. I'm pretty excited about it. But that didn't, unfortunately, the timing didn't work. It was just a hard time. Like 2017 was a hard market. So, it was, we had two deals we looked at, neither one worked out. We cleaned up the balance sheet and, started focused on just, buying crypto.
Gotcha. Yeah, crypto's cool. So what do you, so you have this BTC on your balance sheet, like going forward, what is that treasury to you? I guess if you want to call it a treasury, like, what does that cash do for you? Do you have plans for that cash? Is it just going to be there in reserves, or I guess what's your money management strategy behind that stuff?
So, on the BTC side right now, where it's just sitting there, we've had discussions on, theoretically we could lend it or an interest on it. It's something we've thought about. We're looking at, expanding into other, digital currencies where, you may not be able to stake them, right? Like an example would be, like I like Filecoin. I think it's an interesting protocol. It's kind of like a backbone like storage. Hey, God, I'm on a call.
It's okay. She can't be seen. It's all good.
All right.
No, she can be seen. So it's okay. Let her be. It's 2021. Everybody works from home.
Yeah, exactly. So, they're interesting. Okay, I'm gonna climb up. Okay, Sweetie, please. They're interesting protocols beyond, just proof of stake, right? And beyond proof of work that are interesting. And so, if there's something that we can't get in, like, I don't know, Filecoin or like a storage, we're not going to actually run, hardware where we're going to, buy hard disk space and run to earn crypto in that fashion. We may want to just, diversify our portfolio in terms of treasury assets into other cryptocurrencies.
Oh, okay. So basically, this is something interesting that I thought about. I don't know if you would. Yeah. Anyway, you know how Warren Buffett basically made Berkshire Hathaway is that he basically bought an insurance company and is using the tax advantage status of that insurance company to build this crazy business empire. Are you familiar with that at all? Not too many people know about that.
No, I haven't really been following that.
Okay. Yeah. So that's what like Berkshire Hathaway is a massive insurance company. They got Berkshire Hathaway Reinvestment, but they have a preferred tax status because they have to have so much cash reserves that the insurance side of his company basically, I don't know what that preferential tax treatment is, but anyway, so he holds all this cash and buys all these companies. So maybe you're thinking of doing a little bit like that in terms of just investing in assets with that potential treasury. Is that kind of what you're saying?
Yeah, I mean, look, I think on the treasury asset side, like I don't want to just leave money in cash. So if we can own, crypto that has the potential to go up, that's pretty interesting to us. And if we can own, positions in disruptive protocols, that's a good place to kind of put our money, right? What we're kind of very cautious to avoid is potentially owning. Cryptocurrencies that could be securities, right? Like we definitely, we do not want to be an investment company, right? We've got operations. We're now, growing revenue. The last thing we want to do is, get classified as an investment company. So
Gotcha.
We're pretty cautious about, what we buy.
Yeah, that'll limit you a little bit.
Yeah. Yeah, I mean, look, XRP is a great example, right? Like, hey, it's a utility. Now it's, the SEC is going after them. It's a
Oh yeah.
security. It's going the other way now. Like, I don't know. Like,
Well, hey, if anybody knows this story, man, it's you. I mean, after all the government garbage you've been through over the past several years,
yeah,
in
and
terms
look,
of regulations and just classifications, and oh, I have to show this as this much on my balance sheet. Like that's crazy.
yeah, and it's look, I think it's good, right? Like, I think, if we look at like the SEC in particular as an organization, I mean, its goal is the formation of capital and the protection of investors. And do they always do the best job doing that? No, right? Sometimes they lean more towards, they usually lean more towards, protection of investors versus formation of capital. But, we know what the world looks like without, someone
Regulation.
regulation, right? I mean, look at the ICOs. There were so many scams,
Yeah.
so many scams, and a lot of people lost their money, and it's really, really unfortunate. And so, you know, are you necessarily, regulated very well? Maybe. I mean, there's always room for improvement, but I think, at its heart, there's a need for it. It absolutely needs to be there. The implementation of it, like, yeah, I'd love to see some improvements. I'd love to see,
Clarification.
yeah, watch that. And it goes down to that kind of being first, right? Like for us, it's hard to be first. You have to explain a lot of things, right? Like even to our investors, like I've had numerous calls with investors trying to explain what we do, and it's a new business, right? There's no one, on the public market side.
Yeah, especially on the public market side. That's what I was gonna say. Is that you can do whatever you want, but when you start going public market, which is the thing that you're trailblazing. So, do you think you got a winning strategy now? Do you think this is the way to go?
Well, I don't have a crystal ball, but I think how we're positioned now as a company is, I mean, it's just so much better it's the best position we've ever been in the last, since 2014. I mean, it's just we've got a strong balance sheet, north of 20 million in cash and crypto. We've got a revenue generating model now. We've expanded the board. We have the uplisting to an exchange is actually in sight. Where we go from there, we'll see, right? Like I think, we've got at least a proven record of sticking around and not giving up. And if we can really move it to the next level, I think we've got a pretty compelling business. And if we can expand the team, and start to add more services and create more shareholder value, I don't know. I'm overall pretty bullish, right? And we'll see. I mean, the market's still developing, right? I mean, it's crazy. It's like 7-8 years later, and I still feel like we're early to the game.
Yeah, I think it's going to feel early until we realize it's late.
Yeah, exactly.
Kind of like Amazon stock, right? Like one day, like, wow, this is like the second biggest company in the world. All right, I guess the story's over.
Yeah.
So
yeah, and look, and they've crushed it. And again, I kind of look at it as, our stock is not the company, right?
True.
Like the company is the operations, what we're building. Our stock's going to go, maybe it could go up, it could go down. Like it's completely outside of my control, right?
Yeah.
So that's just like crypto. It's it goes up, it goes down. I mean,
you just live with the consequences, I guess. Something
yeah.
like that.
Yeah, and our view is as long as we're well positioned, regardless if it goes up or down, that kind of sets us up for long-term success.
Yeah, and that's the most important thing, and people just have to realize that. I think is that you have to have the long-term outlook. Otherwise, you're just flopping like a fish, chasing the next hot thing, which is very common in crypto. So. All right. Well, that's all I had, Charles. Hey, man, really thank you for joining me. Did you want to give any other messages, anything you want to talk about that I didn't ask, or that message you want to get across?
No, Randy, look, I really appreciate you taking the time to host me. Again, I apologize. My daughter joined the call. It's scheduled after school. So, but again, I really appreciate you taking the time to speak with me. Hopefully this is valuable for to your subscribers. So.
Yeah, I appreciate it. No, I think it is. I didn't actually know about your business until you reached out to me, and I did buy some shares. I won't disclose how many, but I did buy some shares. I do think it's definitely an interesting business, and Yeah, a little bit under the radar, I think. And if you do get listed on the Nasdaq, I think that will start to open some doors. Um, and then if yeah, as crypto keeps getting mainstream adoption, because I think we didn't really talk about that, but I think crypto, as of this cycle, in my opinion, crypto is here. There's no more question. In 2017, everyone's like, "Oh, it's dead. Nothing's going to
Yeah.
come back." But I think this cycle, it has nothing to do with the runs in the assets. I think it's the overall um, adoption of cryptocurrency, even buying Bitcoin by companies such as MicroStrategy, yourself, and other entities. I think it's here to stay, and I think the journey's beginning, and I think you're on kind of on the ground floor even 7 years later.
Yeah, yeah. I mean, look, we survived. I think that was the key. But yeah, I agree. I think it's here to stay. How long it takes till the really profitable companies and applications built on top of it, we'll see. But I don't think it's going anywhere, right? I mean, it's such a unique and transformative technology, that I don't think it's going anywhere, right? And there's so many things that could be done better with it, like voting. Like voting's a disaster. That could be fixed, right? That could be fixed tomorrow.
And it'll probably be on Ethereum.
Yeah, I mean, who knows, right? I mean, that'd be amazing.
Yeah, decentralized. I mean, that's the whole thing. Is that everywhere I'm looking around and it was the same back in 2017. Everyone's focused on decentralization. That's the main thing, because you can't have security without decentralization. In reality, anything that's centralized can be hacked, can be attacked, can be singled out. And that's what makes Bitcoin such a successful cryptocurrency, is that the fact it is so decentralized, even though you can talk about mining pools and centralization in that way. But yeah, I like the approach with the Ethereum nodes. I think that's wise. I think it's a little early, so that's good.
Yeah, it's definitely early. Most people don't understand what we're doing, so it is what it is.
Yeah, that's for sure. What do you do?
Right.
I'm not even going to explain it to you. Just go buy some stock. Shut up.
Well, I can't tell people that, right? Like that's what
I
Google
can.
website. We literally have educational videos on it, right? Because
Yeah.
so many times I'll talk to people, I'm like, just go watch the video.
Yeah, just
Take
go
10 minutes, watch the video, then ask me the questions. Don't ask me the questions first. You need like the infographics and the pictures and
Yeah, and I think see, when you're talking about public companies, I'm a huge Tesla fan, and if you're a big fan of Tesla, it's easy to buy the stock. If you're a big fan of crypto, like what do you do if you're just a normal investor that's maybe scared? I mean, like you said, you can buy a Riot blockchain, a GBTC, but then you have BTCS, which is the other side of the coin, which is actually running the actual network of cryptocurrency, running nodes on Ethereum, which I think it's a very unique way to get involved in crypto that isn't necessarily mining Bitcoin like everybody else is doing. I think it's pretty unique.
yeah, well, yeah, that's the hope. So, um,
Yeah, push that message. Say don't be like these other guys. They're all doing the
no,
same
look,
thing. Come over here.
yeah, we've always tried to be, pretty creative, right, in what we do and unique. So, I mean, that unfortunately the downside is if you're early doing that, right, there's a lot more education, regulatory uncertainty, etc. So,
Yeah. All right, Charles. Hey, well, thank you, sir. I really appreciate it.
Thanks so
It
much
was
for having
fun.
me.
Yeah, maybe we'll do it again. If you guys
Yeah,
have
without
any
a doubt.
new updates or something, let me know. And tell Charlie Lee we all said hello. Everybody
Yeah, I'll
loves
do
him
that.
over here. Tell him he needs to tell us when we need to sell our Litecoin again. So
And maybe it'll happen with they can have a run like Dogecoin. It'd be nice. I think Dogecoin's actually like a fork of Litecoin, if I'm correct.
I believe it's a fork of Bitcoin. Is I think what it is.
No,
believe
Dogecoin, I'm
Doge-
pretty sure is
is it
forked
Litecoin?
from Litecoin off something else. Something was forked and it was forked. I'd have to go. It's like ages ago. I'd have to go like look it up. But
Yeah. Yeah, crazy run though. I don't know. Do you think Elon has a plan for Dogecoin? Not that you've given it much thought, but just I think he may have a plan to use that network for something since it isn't like utilized. I have just a thought, not a.
yeah, I mean, I don't think he's like buying Dogecoin to pump it to make money because
I know.
he has so much money, right? Like
doesn't
it's like
need it.
ridiculous to be like the guy with that much money is going to go, do something for that reason, right?
It's like scamming a
he's-
homeless person when you're a billionaire.
Yeah, it makes no sense, right? Like, I think he's either just genuinely interested, or as you said, maybe he has some other, idea or plan, right?
Yeah,
So,
see,
and
I thought it
given,
was interesting because because I'm a price action guy. What I do is I view demand via the information on the chart. And the information on Dogecoin was that there's lots of demand. I can't you can argue it's a joke, and we didn't give it a lot of credence early on. We always laugh at Dogecoin, and we've traded it from time to time. But like the action on the chart and the lack of selling pressure, to me says, look, maybe Elon has something up his sleeve with something with SpaceX or something like that, because there's very little selling pressure. And then if you actually look at Dogecoin, it actually I think it's a block a minute. It's a block a minute, so
yep,
it's faster than Bitcoin, basically based on the Bitcoin protocol. Has a different security aspect to it, which isn't SHA 256. That's all, as much as I go into it. But it actually may have some value and validity, and maybe Elon's like, this is pretty good, it's pretty cheap, and I'm gonna buy it. Kind of like what he did with the GM plant back in the day, when, what is now the Fremont factory. So that's just a thesis that I've kind of come up with over the last couple of weeks, because I could see Elon making one or two comments, but why would he harp on this thing for months? Like, what's the reason? And to your point, he's not just doing it to make a dollar.
no, he doesn't need the money, right?
Yeah,
I mean,
at all. He
yeah,
doesn't even
no,
own
I mean,
any
if all the,
houses anymore.
yeah, I mean, yeah, I would assume he's got some sort of a plan, or he just likes his stuff. He's just
Maybe,
fascinated. That's another alternative,
maybe,
right?
maybe. At least we're on the same way. Or at least it's not just me. Okay.
Yeah,
I was thinking it was just me for a minute, but yeah. All
yeah,
right. Well, pretty much off topic, but still fun stuff. Thanks, Charles. I
yeah.
don't want
Thanks
to take
again.
up too
Take
much more
care.
of your time. Have a good day. We'll talk next time.
Yep.